Alrighty, guys, so Tesla first up here out of these stocks. Where's the potential upside here? What are we looking at here in the best case scenario for Tesla? So we're up $400,000 now at this point in time on Tesla. It is absolutely rolling in a massive, massive way, right? So first thing I want to start out here is if we look at where the stock was a year ago, today, the stock was actually $281. Now, it's interesting because you look at the stock, it seems like it's gone so high, right? Because it's gone up 50% in the past month, but let's not forget the stock is lower today than it was at this same point last year. And that's despite the NASDAQ being significantly higher than it was at this point last year, and the S&P 500 being significantly higher than it was at this point last year, right? Now, additionally, if we think about last year, like we were in a cycle where things were going to get worse for Tesla, right? Numbers are going to get worse, deliveries, production, all those sorts of things, right? And if we think about where the company's at now, there's a viewpoint certainly that things are going to get better and better and better for Tesla from here, and we've bottomed. Like basically this quarter they're about to report will be the bottom in terms of deliveries, it'll be the bottom in terms of growth rates, it'll be the bottom in terms of margins, all those sorts of things. And the viewpoint is in the back half of this year, things get better and better, and then going into 2025, right? And the other additional thing we got to consider is, guess what? We're a year closer to Fed rate cuts now versus we still had a long way to go at this time last year, right? So those are some things to factor in right off the bat here. Now, another interesting thing, if we want to back it up 2 years, check this out. 2 years ago, Tesla stock was $297. Now, that was in the intense Fed rate hike cycle, right, which is obviously over now at this point in time. The next move for the Fed is likely going to be lower, and it's just a question of, are we waiting 2 months for that, 4 months from that, 6 months from now? That's really the only question at this point in time, right? So we're obviously significantly lower than where the stock was 2 years ago as well, right? Now, the setup for Tesla is absolutely phenomenal. It's a really good setup for Tesla here. So if we look at the quarter they're about to report here in the next, we can call it few weeks, right? They're expected to report EPS down 33% year over year, and they're expected to report revenue down about 3% year over year. Now, keep in mind, Tesla's done a lot of price cuts in terms of their vehicles, right? So that you would expect to hit EPS, although the price cuts have basically stopped over the last few months, but it's still quite a few if you tack on year over year. So that's something to keep in mind. Also, the ramp of Cybertrucks likely hurting margins and hurting profitability in the short term. Something to keep in mind there. However, services has likely grown exponentially versus where we were at last year, so that should be a boost to EPS. And then additionally, Tesla certainly has cut some employees, quite a few employees, versus where they were at this point last year. So, I don't know. I don't want to get too excited, but there might be potentially some upside in regards to EPS. Now, as far as the next quarter, only 2% EPS growth is expected. And then the December quarter, only 6% EPS growth is expected. So the expectations for Tesla are basically on the floor at this point in time. Revenue-wise, revenue is expected to be down about 3% in this current quarter they're about to report. And in the following quarter, 9% revenue growth and 8.5% revenue growth. So, keep in mind, Tesla's usually a company that you're expecting growth rates of 30, 40, 50 plus percent. So let's just call it for Tesla, this is expectations on the floor for Tesla. This is as low as it gets for Tesla in regards to that, right? Now, additionally, here we are, we're now less than a month away from the big August 8th day where they're going to show off Robotaxi, talk about the future of that. We'll, maybe get more information on who's going to lead that business, and there's a lot of rumors out there in regards to what's going to happen there. So that's going to be a huge day. It's massive for Tesla in terms of kind of understanding where Tesla's going over the next 10 years. Not really over the next year, but really it's about where Tesla's going over the next 10 years. And it gets a conversation about Tesla going from just what's the production numbers this particular quarter, what's the deliveries this particular quarter, right? To where's this company going to be at 5 years from now, 10 years from now, 15 years from now as Robotaxi takes off, right? Now, additionally, this gets into the election, and this actually matters really significantly. T-Man's definitely taken a commanding lead in the polls, specifically since the debate. And you might say, what's the big deal? Why does that matter in regards to Tesla? And wouldn't this just be a negative for Tesla? Well, no, not necessarily. And here's why, okay? So imagine a situation where, the view is T-Man's going to win the election, and he does win the election. Well, have you watched any of his speeches? I've watched 2 or 3 because I'm interested to hear like what are his points he's kind of leaning on in this election cycle versus 2020 versus 2016. In the 2 or 3 I've watched, all of them he brings up like something negative EV related. He makes it sound like EVs are kind of the enemy. Now, the reason that's important is if there's a viewpoint that T-Man could potentially take away all the tax breaks for buying an EV, right? Then anybody that's interested in EV is basically, there's going to be a huge pull forward in demand that comes in Q4 because of the fear of, T-Man's going to take away all these tax credits, the $7,500 tax credits, right? I've watched this play out, and I was a beneficiary of this exact thing in the past, okay? Back around 2012. Obama got reelected, and there was a viewpoint, it was a false viewpoint, but there was a viewpoint that Obama's going to take away all the guns. And guess what? Everybody flipped out, and I owned Cabela's stock at that time, and I was a massive beneficiary because everybody and their grandma went out to buy every freaking gun that was at Cabela's, okay? I'm talking, I'd never seen gun sections like that. You would have thought we were going in the Civil War. Holy smokers, that wasn't no jokers. And if you were around during that time, around 2012, you know what I'm talking about. If you paid attention to the guns in the gun section, you couldn't even get ammo. It was so insane. The demand was at a fever pitch. And so whenever these presidential cycles happen, a lot of people run to these conclusions about this guy's going to do this or that. Sometimes they're false conclusions, but at the end of the day, it actually spurs massive demand in certain areas. And so if T-Man gets elected, which he probably is, it's going to cause a huge demand in Q4 specifically, because people are going to be, the media is going to be covering it. It's going to be all over X. T-Man's going to probably take away the tax credits for EVs, and he might not, by the way. But that doesn't matter. All that matters is people are going to freak out. There's going to be massive FOMO that ends up coming in the market, right? So something to kind of keep in mind there. And do I see T-Man losing? At this point in time, no. If B-Man runs, I think he's going to get beat. And then the other additional thing is they talk about, well, what if Kamala runs? I don't think she's going to beat T-Man either. There's really only one person I think could probably beat T-Man, and that would be Michelle Obama. And I don't think she has any interest in running for president. So therefore, I don't think they got anybody who's ready to take down T-Man over there. So that's something to kind of keep in mind here. So my best case scenario for Tesla in 2024, in my opinion, the best it can kind of get up to is kind of the 295 to 315 range. And that's assuming we see margins bottom in this current quarter we're in and just continue to go up for the back half of the year. Also, Elon and the management team signaling that margins are going to get better. We got to see services accelerate growth even to a greater extent. And then we got to see that revenue start going up again and hopefully starting to reach double digits in the back half of the year. That would be very exciting. And if we could see a couple of little, let's call it raising prices a little bit, oh my gosh, that would be substantial, absolutely substantial for Tesla. Now, realistic bull case for 2024, in my opinion, on kind of where this stock finishes out at, I kind of view it at 270 to 290, somewhere in there roughly, right? Which is where we're already starting to approach at this point in time. And this would be a scenario where, everything goes pretty good, but nothing's like insane great, right? And so we kind of finish the year at kind of that 270, 290 range and then prepare for 2025, which is going to be a huge year in regards to Tesla, specifically for Cybertruck. That's a big thing for Tesla because this is really the ramp year for Cybertruck, but in terms of being meaningful to numbers, that should be 2025. So now let me answer this question. Is there anything that could make me sell my Tesla stock this year? And the answer to that is no. There's nothing this year that could make me sell my Tesla stock. If it goes to 300, 315, I have no interest in selling out of shares. I had interest in selling the stock when it was, getting closer and closer to $1 trillion market cap in the past, and then when it went over $1 trillion. But that was years ago. That was when Tesla was in a very different place at that particular time. I look at it now, and I think Tesla's set up much better for the next 3 to 5 years than when I was, selling a lot of my Tesla shares, let's call it 3 to 5 years ago. It wasn't 5 years ago. It was more toward, 3 years ago, 4 years ago, something like that, right? When I was dumping out of a lot of my Tesla shares. And so I just look at the next 3 to 4 years, and I see a lot of good things for Tesla. When it comes to EV demand, when it comes to their services business, when it comes to growth rates, when it comes to profitability, when it comes to robo-taxi and getting that business up and rolling over this next 3 to 4 years. And so when it comes to, full self-driving completed, I mean, there's just so many things for this company over this next 3 to 4 years that I think it's going to be a very good next 3 to 4 years in regards to kind of Tesla muscle. That's my personal opinion in regards to this stock. Okay, so that's kind of where I see it kind of heading out here in the bull case scenario in 2024.
Hey, it's Jeremy. I hope you really enjoyed watching that clip here today. What you're looking at in front of you right there, that's 1000xstocks.com. That's my advanced software that I've been working in the background creating for a long time. This software is so much more advanced than what others are presenting out there in the market. And as somebody that's been in the market 15 years, I want to create something that was simple, that had exactly everything I needed to make my judgments on companies, such as forward P ratios, 2-year out forward P ratios, price to sales ratios, forward price to sales ratios. I wanted the ability to be able to compare different companies versus each other. I wanted to be able to compare a Meta versus a Google versus an Apple and be able to see all those different metrics laid out all next to each other. I wanted a service that I could listen to conference calls right through and even be able to toggle and adjust the speed I wanted to listen to those conference calls. I wanted a service that I could search SEC filings right through. I wanted the ability to do that all in one service, and that is exactly what I've created with 1000xstocks.com. If you want to apply for access to this, go to the description area of this video. You can click that link and go ahead and apply for access to this. If you don't want to do that, you can go to 1000xstocks.com. Enjoy.
Tesla Tesla up another $8,700 here today, up $380,000, up 813% on Tesla stock in the public count. And, you know, I try to tell people, like, when this stock moves, it really freaking moves, and it moves way quicker than anybody's anticipating. On a 1 month, the stock's up 43%. 43% on a 1 month. Guess what? They didn't even release earnings. They didn't even release earnings in the past 1 month, and the stock just moved 43%, right? Here is a picture of Tesla stock. You got to understand, when Tesla stock is very similar to a train, and once a train gets moving, ooh, it's moving, okay? It might take a little bit to kind of get it into motion, but once those wheels are spinning, ooh, look out, okay? Now, here's what we have going on at this point in time. Because Tesla's made such a big move, the stock's very controversial. It's always been that way, by the way. It's actually less controversial nowadays than it was 5 or 10 years ago, I can tell you that much. But, you know, you got people fighting. You know, this guy says buy. Tesla stock roars with an almighty charge. Technical analysis. This person says sell. Tesla share price surge makes no sense. It's clearly overvalued, right? And you got these different folks kind of going back and forth and back and forth. And that's what you're going to have in Tesla stock now at this point in time. But I think to the people that are bearish on Tesla stock, they got to understand that in 2025, we know 2024 is kind of a lost year for the stock. And not for the stock, I should rephrase that. It's a lost year for the financials of Tesla. Like, we're not going to see anything exciting this year in terms of revenue growth, net income growth. We know that, right? But 2025, it starts again, okay, in terms of Tesla's exciting net income opportunity. And here's the deal with Tesla's net income. 2019, they had an $862 million loss, and they flipped that to 2023. They had nearly $15 billion of net income, right? 2024 is basically guaranteed to be a down year for net income, but then we should get back to growth in 2025 and beyond. And what's very exciting about that, is imagine what Tesla's net income is going to go from 2025 to 2029, right? And so the PE ratios and those sorts of things, they could look expensive right now, but just understand Tesla can eat that up very quickly. Look what they did in this little span here. Imagine what they're going to do in the next 4 or 5 year span. It's going to be tremendous, right? Well, once again, 2024 is a lost year on the net income side. 2025, we get back to growth, okay? And so, you know, I'd put it like this. You got to get out of the way of the train. When the train's rolling and Tesla, the train is rolling, you get out of the way and you let it do its thing. Too many short sellers, too many of these folks, they like to try to jump in front of the train when it's rolling, and it's like the best move you can make is either hop on the train when it's moving that fast or just stay out of the way, okay? That's the bottom line in regards to this. Now, I had a really good kind of hedge in regards to Tesla late last year and into the beginning of this year, right? I acquired these put options on Tesla back October 17th, 2023, and then I got out of these ones January and February. This was in the public account, right? And I made $6,400 in a pretty quick amount of time and got a great return on that. But the reason was, at that particular time, I knew the story with Tesla was going to get worse. The issue you have if you're trying to bet against this stock now is the story is likely going to get better and better and better. So you don't have what I had when I got to hedge against the stock and make really good money on it. So just a little food for thought in regards to that. If you think like this gentleman's thinking, Tesla stock price is clearly overvalued. You got to know when to kind of hedge against these. It's kind of the way I think about Chipotle right now. I think Chipotle is an attractive hedge. I might be wrong on that. I could be wrong on that, right? But the bottom line is Chipotle's had a lot of bad publicity. They have a super high forward P on the stock of 55 for a burrito chain, right? And you can't just short for valuation. You can't just do that. But if you have other things to tack on, then you might have an attractive hedge opportunity. So bad publicity compounded with a 55 forward P, and then wage pressure that's going to really start hitting them this current quarter they're about to report, and then over the next few quarters. That should be interesting. And then they might have to go through a big advertising campaign to try to wash out this bad publicity they got, and that could be very, very costly to the company, and that could really hit margins and hit profitability in a substantial way, right? So, we'll see what happens there, but that's a way I kind of think about that. But when the train's rolling, get out of the way of the train. The good thing for Chipotle now, the train has stopped, right? And now we're just kind of waiting and seeing, is the train going to roll again, or is the train going to start going down in a substantial way? Speaking about trains, Amazon's a train now at this point in time, $200 stock price. Check out this meme here. Oh, you gotta love it, right? You gotta love it. Oh boy. Now, here's the important thing to understand about Amazon right now, okay? Listen, the company's in a growth cycle right now. They're not in a shrink cycle. So this is looking at their revenue. And what we're looking at here is 2022's latest quarterly revenue versus the 2023 versus the 2024. So from 2022 to 2023 quarter, they grew revenues 9%. But from the 2023 quarter to this latest quarter, they grew revenues 12.5%. It's very exciting. That means the growth at Amazon is back, at least for now, right? Which is a very exciting time period to be an Amazon shareholder. Now, additionally, maybe even more exciting is the quarterly net income. So if you look at quarterly net income, they went from $8.1 billion of net income to then negative $3.8 billion of net income, which was a disaster when they went from 21 to 22, right? Complete disaster. And then they raised up that net income massively. They went from $3.8 billion net loss to a $3.1 billion net income. It's a $6.9 billion plus change, right? But then in the latest quarter, right, versus last year, they raised up that net income $7.3 billion on a year-over-year basis. It went from $3.1 billion to $10.4 billion. And this is a much more impressive number, not just because it's a bigger number, but because when you go from a net loss, and you're usually a net income company like Amazon's been, and you go from a net loss to a net income, it's not nearly as impressive as when you're already back to net income, but then you just explode it much higher, okay? So that's the deal with Amazon, right? And you might look at Amazon, you might think this is a rich stock. Forward P on the stock of 46, 2-year out forward P likely 32-ish, right? But here's the deal. The current year expected earnings per share growth of this company is 53%. The trailing 12-month earnings per share growth, by the way, is 749%. The next year, earnings per share growth is at 24%. For this company. So, the moral of the story in regards to this Amazon situation is you can't really call this stock expensive when they're expected to grow at these sorts of growth rates when it comes to earnings per share.